Hey guys! In this video I will show you some trading ideas that people hardly talk about. We promise that after watching this, your trading would improve drastically. So, if this sounds nice to you, make sure to click the subscribe button and hit the notifications bell, so that you know exactly when we release new content. So let's get started. Identifying and understanding trends is crucial in trading because it provides valuable insights into market sentiment and helps traders anticipate potential price movements. Here are a few ways trends can be used in trading. Many people have been asking, how do we draw a trend line? So first, what are trend lines? A trend line is a line we draw on our charts that connects the swing highs and swing lows during a trending market. In technical analysis, a trend line is a straight line drawn on a price chart to connect two or more significant price points. It provides a visual representation of the trend and helps traders identify the direction and strength of the market. Here's how trend lines are used in forex trading. 1. Trend identification. Trend lines are primarily used to identify the direction of the market. An upward trend line is drawn by connecting higher swing lows, indicating a bullish trend. So let's see from the chart what an uptrend is. Here we have a clear uptrend. Now at the top after each run is completed is called a swing high, at the bottom of each pullback before a run begins is what we call a swing low. So what this means is, in an improper uptrend, price will be making higher highs and higher lows. Now, a trend line is then applied at the bottom to connect the swing highs along the top. Now in a downward trend, a line is drawn by connecting lower swing highs to higher swing high, indicating a bearish trend. So what this means is, in an ideal downtrend, price will be making lower highs and lower lows. Now, a trend line is then applied to connect the swing highs along the top and swing lows along the bottom. So why exactly do we draw trend lines? The first reason is because trend lines can act as a form of support or resistance. It doesn't mean that if a line touches the trend line you enter a trade, price action has to be considered in combination with other factor. The second reason for drawing trend lines is because a break in a trend line can signal a possible trend change. Please note that in a downtrend, the trend line placed above the trend. So that when price breaks this trend line, it can signal a possible trend change to an uptrend. In a similar way, our trend line is placed below the trend for an uptrend. And when price breaks this trend line, it can signal a possible trend change to a downtrend. This is why identifying a trend is very important in trading. 2. Support and resistance levels. Trend lines can act as support and resistance levels. An upward trend line may act as a support level, where prices have a tendency to bounce off and continue the upward movement. Conversely, a downward trend line may act as a resistance level, where prices tend to encounter selling pressure and continue the downward movement. Traders often look for opportunities to buy near an upward trend line or sell near a downward trend line. Don't try to show how perfect you are in trading, give some room in your trade to breathe. Your support and resistance should be placed within an area, not in a single line. Trading requires a lot of patience, studying the trade carefully and ensuring that it follows all the information you have for a good confluence, then trading. Trade with a small lot size to allow for good stop loss. Don't place stop loss too close to your trade. 3. Breakouts and reversals. Trend lines can help traders identify potential breakout or reversal opportunities. A breakout occurs when the price breaks above or below a trend line, suggesting a potential change in the trend. Traders may consider entering a trade in the direction of the breakout, expecting the price to continue the new trend. Conversely, a trendline break in the opposite direction may signal a trend reversal, prompting traders to adjust their positions accordingly. Trend lines. Now here is exactly what you want to look for when trend trading with trend lines, which is an area where support or resistance crosses with a trend line. This access point is also what we call an area of high confluence. Now, an area of high confluence is an area where a lot of traders have their eye on, meaning that there is a higher probability that traders will be taking action on such an area. Confluence trading is one of the best way to trade forex. What this means is that all factors have been checked, and there is a great probability that the trade is correct. Let's study some chart for better understanding. Please note that market never stop immediately and reverse. It takes time to consolidate. Before reversing, doji candles, loss of momentum and candle with large upper wick are created. One of the very important loss of momentum is the formation of the double bottom and top and trend change. Don't fail to find out why you are entering a trade. Trading involves proper check and confirmation. Confirmation with other indicators. Trend lines are often used in conjunction with other technical indicators to confirm trading signals. For example, if a trendline break coincides with a significant support or resistance level or is accompanied by a momentum indicator signaling a change in trend, it can strengthen the trading signal and provide higher confidence for traders to take action. Using indicator without first learning price action is a big mistake. Always fully understand price action before taking a trade. I am not saying that using indicator is bad, but don't misuse indicators. Use indicators as a guide. Please don't conclude your trade just by indicators. Don't just see two indicators crossing and you buy or sell. When you open a chart, try to find out who is in charge of the market. The buyers or the sellers? How is the price reacting within the previous high and lows? Is there momentum gain or loss? Are buyers or sellers price up or down? Don't trade blindly. Study the trades very well to reduce the probabilities of losing a trade. It's important to note that trend lines are subjective and can vary depending on the trader's perspective and the time frame analyzed. Different traders may draw trend lines slightly differently based on their interpretation of price action. Therefore, it's crucial to practice and gain experience in drawing trend lines and using them in conjunction with other technical analysis tools to make well-informed trading decisions in the forex market. What you have to do is take high-quality trades. The concepts we have introduced in this video will help you build towards that beautiful game. To increase your trade quality is knowing when not to take trades, which is just as important as knowing when to take trades. So if you want to learn more about our trade entry strategies, go through some of our video to help you in your trading. So if you enjoyed this video and want us to make more videos more frequently, please click the subscribe button and hit the notification bell. Also comment below with your thoughts and what kind of topics you want us to cover, as this would let us know you want more videos. Thank you very much for watching, and I'll see you in the next episode.